got quarterly inflation data out in just a couple of minutes. Joining me now live from Sydney is CommSec's Ryan Felsman for more. Ryan, we're expecting things to sort of go sluggishly along today. Talk us through it.
Well, that's right, Tom. For the December quarter, we're expecting to see headline inflation lift by about 0.6% and on an annualised basis to lift by around 1.7%. That would represent the 16th consecutive quarter where inflation was below the Reserve Bank's 2 to 3% inflation target. So price pressures across the economy remain quite subdued at the moment. Of course, if you look at that excess supply in the labour market, wages growth at just 2%, that intense global competition in the retail and services sector as well. And of course, at the same time, private sector demand remains very sluggish. So combined, we're expecting prices to remain very subdued. That said, though, we're expecting to see a lift, certainly in that excise duty for tobacco to lift by about 8.5% and also fuel prices to increase by 5.5%. So combined, that will contribute about 0.5 percentage points to inflation overall, and the drought effect for food and vegetable prices to lift by around 2% as well. Certainly veal and beef prices up by 2% at the same time. So some of those prices certainly from the drought impact will start to feed through as well. But more broadly, though, we are seeing weakness when it comes to clothing and footwear. Discounting around Black Friday should reduce those prices by about 2% in particular.
All right, so quarterly, the fourth quarter inflation rises to 1.8% year on year. This is just above market expectations. Ryan, I don't think it will get hearts aflutter in either direction, dare I say. You spoke about some of the factors too. We can delve into what is available so on. I guess there's almost, good and bad signs. We see food rising. We're hoping inflation's higher, but not necessarily off the back of those sorts of one-off factors, right?
Well, that's right. And if you look at that trim mean number, the core number that the Reserve Bank looks at, it increased to 1.6% on an annualised basis. So inflation remains very contained at present. So that's good news for consumers, of course. Certainly those everyday goods prices are coming down. But at the same time, the drought and then the bushfire impact, particularly on orchards for apples, will see prices potentially lift into the first quarter. But broadly, consumers are in a good spot at the moment. Certainly those consumer prices remain very subdued, though. But if you look at the business side of the equation, if you're a business owner, you'd like to lift your prices at the moment to make a profit. So business profits are at 5-year lows if you look at that NAB survey, and that's contributing to business confidence being at 6-year lows. So really that weak consumer backdrop is feeding through the business backdrop, particularly when it comes to investment and spending.
The first rates decision of the year is not far away. You wouldn't expect this to push the needle one way or another?
No, we're expecting to see interest rates cut again in April. But of course, there are a lot of factors at the moment in the Reserve Bank's calculus, and certainly the jobs market is the key one. We've seen a couple of consecutive months of solid jobs growth, about 67,000 jobs created in November and December, 263,000 over the last 12 months. So the jobs market remains in pretty good shape at the moment, and we think they'll keep the Reserve Bank certainly on the sidelines next week.